Hi. Regarding our market outlook, let's talk a bit about the long term first. When I say long term, it's 3 to 5 years. Essentially, we think that the best way to look at long term valuations is to see what returns have come about versus inflation. Typically, when you see any market, equities tend to return 5 to 7% above inflation. And if you see the Indian market today on a 20-year basis, the return is 6 odd percent. On a 10-year basis, it is 7 odd percent. So the conclusion is it's a fairly valued market, but we don't think we need to be very defensive about equities, although deep value is not there, to be sure. And the reason why we think like that is that if you see globally, most governments have a lot of debt. And historically, what we've seen is in that scenario, the interest rates tend to be low, the monetary conditions, the liquidity tends to be high, and that favors equities. So overall, we have a constructive stance on Indian equities. And moving on to more near-term things, in terms of the business cycle, I think there are three regions that we look at. One is US, the second is Europe slash China, both of them tend to move together, and of course, the big India cycle. When we look at business cycles of these three regions today, we prefer the India business cycle because when you see inflation is low, current account deficit is under control, there is very little leverage in banking, household or private sector. So we think that the growth in India, which has been mildly disappointing over the last 12-15 months, we think there will be a fairly good recovery going forward because there is government stimulus, there is interest rate cut, and even the exchange rate is very competitive at this point of time. Between US and the emerging market cycle, we think the emerging market cycle is more attractive because we do think that the dollar in the medium term will be weak. So as a summary, when we look at our portfolios, they are more aligned towards domestic cyclicals versus global cyclicals. They are more aligned towards consumption versus capital expenditure or exports. That, in summary, is our view.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.